Hey, good afternoon, everyone. It's 2 o'clock on Monday. Let's look at what the market action was. Really not a whole lot of new fundamental news, just more follow-through action from last week. Prices have really rolled over here in basically everything. This is new crop soybeans here that we have up. You can see today we tried to rally them and just couldn't hold them, so we closed right near the end of the day. I think the way this looks is, we're going to come down and test this 1347 level, and really likely, more likely, this 1217 level. And remember, last week we did our Fibonacci extensions off of these moves, and significantly lower is where we're looking. So really no choice here but to stay hedged, and if you're not hedged, to get some protection on, because we don't know where the floor of will come off of this move. And we saw, sorry, my computer restarted and it's messed up my charts. Let me get the right one up here. Okay, here is November soybeans. Let's put our hedge line on here. You can see today we really rolled it over as well. We were up 12 at one point today, and we had reclaimed some of these lows. And then just a few minutes later, I mean, boom, it was basically a straight decline. If I put this on a 60-minute chart, you can just see what happened with old crop beans. 27 cents straight down, without even so much as a whiff of a rally. So we've now come back down. We've traded below our hedge line. We're below all of this support right here, and so I think this is set to go ahead and roll over here as well. Now remember, that doesn't mean the market that it has to just come straight down to it, right? It can bounce and chop and kind of mess its way down, or it can just implode here too. So if you've got old crop beans, this is definitely, in our opinion, a signal that we need to move to the sideline on those and not sit there and hold them. Clearly, we need to work lower. If you're in the bullish camp, and some people are, right? Some people think that that this is still a pullback, and you can make that argument. And here's one of the ways you can do it, is that today all we've done is we still haven't even retraced 61.8% of this move to the upside. And so if you're bullish soybeans, this is the area right in here where you really want to see it stop and find some support and start working itself higher. There's not really a good fundamental reason for them to rally, unless we step in and China starts buying them. Remember, beans are still cheaper in Brazil than they are at our Gulf, and demand has been kind of absent from the market, so lower we should look here. Corn, pretty much the same thing. Let me get switched over here to our July contract, but I'll show you May here real quick. You can see it's starting to fall off too. It's been the strongest of the bunch, but it's starting to give up its critical levels. Here's July. Looks to me like we're set to test the $6 level. Clearly, we've rolled this thing over. Again, we won't go in straight lines, so it could bounce a little bit off of this low, but I'm not looking for any buy signals in here. We've got to keep working lower, in our opinion. We wouldn't get a buy signal until we reversed and came back up above 626 for higher prices. So our view on this is that this could get nasty quick, and hedged is where you want to be and where you want to stay. All right, wheat, this is the one that we've been hoping would turn bullish. Haven't completely given up hope for that yet, but on the other hand, today is not doing us any favors in that argument, and neither is corn. So here's our critical hedge line, 829. We traded both sides of it today about 6 times, as wheat kind of traded everywhere, up 5-6 cents to down 8 or 9, and it did it several times, but it closed right near the low of the day. As this thing rolls over and comes out the bottom of this cloud, that is definitely where we want to be establishing short positions and being completely hedged again, which would be Friday's low right at 8.12 as we roll over and come test $8. I don't know what would cause it to bounce back up, but maybe it will, maybe it won't. There's lots of rain in the forecast, and if that materializes, maybe that's bearish, but driving around Kansas this weekend, I don't know how much rain's really going to help our wheat crop. So I'd like to see this thing find some footing and turn around and rally, but I don't know that it's going to do that with as weak as all the rest of them are. So our system says hedge, be short on all 3 grains, and we're going to stick with that analysis until we come back through it. So if you're thinking of numbers, today's high, 836, is the minimum threshold for where you want to see wheat trade to even have a hope of a bullish argument. 625 for July corn, and for July soybeans, you really need to be back up above 1442, 1445 pretty darn quick tomorrow before you can really make that argument. And if beans break 1428, then I think it's a quick shot down to 1380 for soybeans. So lower we look. I know that's not what we want to hear, but it's kind of what we've been expecting. So it just kind of is what it is. We'll just have to roll with it and stay nimble and stay aggressive as best we can. Hope you guys have a great day. We'll talk to you later. Have a great night.
Once in a while.
Hey guys, I forgot to do new crop corn on that last video, so here's a quick look at new crop. New crop did break all of its support levels today, and then it traded right back up to the side of it. Again, we've been looking at this downtrend channel as something that we don't want to be long above, so nothing on here is a buy signal to us. This is just pretty weak, and I wouldn't be a bit surprised to see it just roll over and push lower. We're really looking down in the $5 level on new crop corn. So not what we want to hear, not really the news we want to deliver either, but that's what these charts are telling us. And until they take us out of that opinion with higher prices, then that's how we have to stay. So lower we look and on we go. Thanks. Have a great night.